All right, so welcome everybody. We're glad to see you all, see your faces or your background screen as you eat your lunch. I am Rachel Flom, the Executive Director at the Economic Progress Institute, and we're so pleased to have you all join us today for our next in our Revenue Roundtable series. Since there's some new folks on the call, which we're very pleased about, welcome. I want to take a minute to explain our purpose behind these Revenue Roundtables. Our mission at EPI is to improve economic security for Rhode Islanders, and we work towards this mission by focusing on education, advocating, and empowering our partners. One of the major bodies of work is focused on ensuring a fair and adequate tax structure and ensuring the state has adequate resources to fund the goods and services needed to make Rhode Island a good place. These revenue roundtables are meant to do both the education and empowering piece. They're not meant to be a coalition, but instead we hope to provide in-depth and meaningful information about the revenue side of the state ledger, and we hope that you will be able to use this information in your work. And we really want you to help us inform our work so that we're providing research and analysis that is meaningful and relevant. So we welcome your feedback on other issues that you're confused about or would like more clarity about. We had over 50 people register today, so usually we would go around the room and say who's here, but instead we ask that you introduce yourselves in the chat. Please put in your name, what organization or which district you represent. But to give you a sense of who registered, we had 21 members of the General Assembly register, which is,
you get that, that's kind of,
we have 21 folks representing community.
Kind of like, ooh, yeah, that's like who, and Channel 12 also, so.
Some of which represent direct service providers. Other organizations are more advocacy focused on a number of different issues, including housing, children's issues, civil liberties, and more. We also have representatives from organized labor, philanthropy, and our wonderful EPI board and staff on the call today, so thank you all. For those of you who haven't joined a Revenue Roundtable before, past materials can be found on our website, but it's actually a hidden link. It's www.economicprogress.org/revenue roundtable, or you can always email me and we can send you materials as well. We are recording the beginning of this and we will share the presentation afterward. And I also want to point you to the FY21 budget summary that we recently completed and posted, which you can find on the rotator on our website, or I think Juan is going to post it in the chat as well. The goal today is to provide you with some good information and then open it up for conversation. So we have an hour and a half together, and we expect Alan's presentation will go for about 45 or 50 minutes. If you have technical questions about what Alan is presenting, please ask them in the chat and I'll be watching and we can interrupt him. But after the whole slideshow, we'll stop recording and open up the floor to questions and conversation. At that point, please use the raise your hand function and to speak, and then you can just unmute yourselves. With that, I'll turn it over to Alan, who is our Senior Policy Analyst on tax and budget issues, who just celebrated his second year of working at EPI yesterday. So happy anniversary, Alan, and take it away.
Okay, thank you, Rachel, and welcome to everyone. Can everyone see the PowerPoint presentation, the first slide now? Great. Okay, so we have a lot to cover, so let's jump right in. Basically, we're going to cover two topics today: the recently passed fiscal 21 budget in last year's GA session, and then some critical topics for the new legislative session and the fiscal 22 budget ahead. And this is just an outline of the agenda. So first, looking back to the last year and to the current budget session and an overview. So currently we're in the fiscal 21 fiscal year, which runs from July of 2020 through June of 21. And this is a $12.7 billion budget that was passed by the General Assembly in December last month. There are four parts to the budget. General revenue includes state funds, monies collected through income tax, sales tax, use fees, Federal funds include such things as matching funds for Medicaid expenses. Other funds include lottery receipts and lottery proceeds, and restricted receipts are monies that come in that are dedicated and transferred to specific departments or projects. So last January, the governor proposed for fiscal 21 a budget just above $10 billion. It's the 10.2 you see in the screen here. And that's generally how the budget's proposed in June. Usually it's adopted or passed in, it's proposed in January, passed in June for the fiscal year beginning in July, along with a supplemental budget for the year that's coming to an end. So last year was not a normal year, and although a supplemental budget for fiscal 20 was passed, the General Assembly did not pass a budget for the current fiscal year until 5 months into the fiscal year. And that budget that was originally proposed at 10.2 wound up being about $2.5 billion larger at 12.73 billion. Most of the difference in that can be explained by the use of federal funds, especially federal coronavirus relief funds. You could see that even though the enacted budget is much larger, the amount that comes from general revenue is slightly smaller than it was in what was originally proposed. Now, the recently passed budget has been called the skinny budget, and question is, how can a $12.7 billion budget be described as a skinny budget? It's the largest in Rhode Island history. And so it's skinny in the sense that it follows a kind of rule that anything the governor proposed adding last January did not get added in, and anything the governor proposed removing from the budget did not get removed. So it's skinny in that sense that it basically adheres to the fiscal 2020 budget without adding or subtracting anything. So there were no new measures, no efforts to increase revenue, cut spending of programs. Where one may see some changes in dollar amounts in the budget, that's because not of a change in policy, but it was following current law that may have required some changes. So the fiscal 21 budget avoided making harmful cuts in jobs and services on the one hand. On the other hand, it did not make any new investments that in Rhode Island and Rhode Island communities in wake of the pandemic. And although it didn't increase any existing inequities, race and ethnic and other inequities, it didn't create any programs or invest money to decrease disparities either. So our recent budget summary, some of which this is from, I think we'll have something that somebody posted, is available on our website. It goes into a lot more details than we will, or presents a lot more examples than I will today, but we want to give a few examples that sort of show how the fiscal 21 budget follows this rule, that it didn't add or remove anything. And just to note, again, the federal funds that made such a huge difference in the size of the budget and what's in the budget, there's almost $1.5 billion in these federal funds being used in the fiscal 21 budget to pay for resources and expenditures. In some cases, those are new services, specific, say, like the vaccine rollout. In other cases, they're being used to substitute for eligible expenses, say, for example, personnel costs in the health department that ordinarily would have been had general revenue funding them, but because of the pandemic, these eligible federal funds can be substituted. And that does leave a question about going forward once we are through this and that kind of federal funding disappears. How do we continue to pay for what general revenue had paid for previously? So in March of 2020, EPI released a policy brief where we outlined what we characterize as an effective response to the pandemic. And we focused on 3 areas: basic needs and vital services, employment and workforce support, and protecting and raising revenue. And for the next few minutes, what I want to do here is sort of use that same framework, these areas we thought were part of an effective response, and to look at some of what was in the budget and from the last session to illustrate. And to try to look at using the themes from the policy brief to look at some of the items to show where harmful cuts could have been made, but were not, where promising proposals were made and yet not enacted, steps that could have been taken were not taken, but where also we avoided backsliding. So first, basic needs and vital services. The first one is, it's a small example in terms of money, but a big example in the impact it would have had for some people, which is that there had been a proposal to expand doula services for pregnant women in right care and Medicaid. It would have cost only about $57,000 in general revenue state funds and brought in an additional $93,000 in matching federal funds. So following that rule about not adding or subtracting anything, this program was not included in the final budget passed in December. So we did not make that small state investment to capture the federal funds. Then we look at something like the expansion of home and community-based services. On the one hand, there was the proposal in the budget a year ago to invest $1 million in some of this, including repurposing vacant beds in nursing homes. So that $1 million is not in the new budget. It was a new proposal. However, there's a large amount of federal funds, 25 million, used to promote the same kinds of and other programs that were part of the long-term care resiliency plan that will help people have opportunities who would prefer to stay at home instead of going to a nursing facility to do that. In terms of Rhode Island Works, Rhode Island's cash assistance program, the annual clothing allowance last year was for children 4 and older was increased. That's sort of outside of the budget, was increased from $30 to $100, though children under 4 remain ineligible for that. But any of the proposals to add to the Rhode Island Works program in the budget, for example, it's a proposal, usually if someone is on this program, they get a job and have income that then disqualifies them, they lose the benefits immediately. There's been a proposal to disregard those earnings for 6 months to allow a transition period. And although there could have used some federal TANF block grant funding for that, it was considered a new program. It was not adopted as part of the budget. Federal funding was, however, used to supply an extra month of emergency benefits to Rhode Island Works recipients, and that was done in December. When in the past we've done these revenue roundtables, our host is usually the Rhode Island Community Food Bank when we do this in person. And so here's another interesting example from for the budget. So a year ago, the governor had proposed doubling the allocation of state funds to the food bank from $175,000 to $350,000. So again, following the rule of the budget, the skinny budget, that was not doubled. The state funds remain at 175 like they were in fiscal 20. However, federal funds were used to help with the necessary and important work of the food bank, an additional $670,000. So sort of two ways to look at this. On the one hand, the sheer amount of money went up much higher than was requested in the budget a year ago. On the other hand, the state contribution was not doubled as originally proposed and stays at the 2020 level. There have been a number of proposals for affordable and workforce housing, and including to create a dedicated stream of revenue for this kind of housing. And part of that was to have a real estate conveyance tax on expensive homes that were sold, and that would have provided money for new units. That was not included in the budget, and the funding remained at the 2020 levels, though we have talk a little bit later about the bond issues that are coming for the voters in March that will provide for some of the investment in housing. Okay, second group is employment and workforce support. The budget does not seek any notable cuts in the state workforce compared to 2020, which is really an important thing. Rhode Island was among many states a decade ago during the Great Recession that made such workforce cuts as part of a response. And economists have looked back at that and concluded that the states that made those public sector layoffs had considerably slower recoveries in public and private sectors than states that did not make such cuts. So it's a good sign that in keeping to this rule that big cuts were not made in the state workforce. In addition, the state took advantage of the federal work share program. The state had such a program ready. There were additional federal funds for this that allowed, instead of laying off people in some cases, to have a greater number of workers have a reduction in hours and get partial unemployment insurance benefits for that, the preserving jobs. In terms of unemployment, so last year saw more than $1 billion spent on unemployment benefits in Rhode Island. Most of that from CARES Act funding, $255 million from the state's trust fund for UI benefits. And a couple of notable things that last year, for the first time, the UI benefits were extended to people who don't usually qualify for state unemployment benefits. This includes so-called gig workers, individuals self-employed, and others. And these, as well as the people who usually can qualify, receive many weeks of extra payments for unemployment insurance. And that is continuing or reinstated now with the December relief bill that was passed. The Earned Income Tax Credit is a credit that helps low-income working families. There had been a proposal a year ago to extend that. The state match, which is now 15% of the federal credit. The idea was to extend that by 1% a year for 5 years. It would have cost $1 million in general revenue for the first year. That, again, as a new proposal, was not included and taken advantage of for the current year's budget. English language learner aid was kept level funding at $5 million, did not invest additional funds to expand that program. And I should say, we're including such things as education, childcare under this broader category of employment and workforce support. Childcare assistance and pre-K, we have a lot more in the document you can find on the website. But briefly, the budget a year ago proposed investing almost $4 million of state funds to increase rates to childcare providers. The final budget did not include those new state funds. However, last May, the governor did temporarily increase the rates of reimbursement through executive order using federal funds, and she's renewed that order a number of times since last May. Okay, our last group, protecting and raising revenue. So good news, again, the budget does not cut any taxes, not personal, state, or business taxes. Again, sometimes people with an austerity mindset go into a situation like this and want to make cuts. So these cuts were not made. The budget, as we've mentioned before, the budget uses, where it's appropriate, to substitute the coronavirus relief funds to replace general revenue for many programs and jobs in the state. The state has a number of economic development programs run out of the Commerce Corporation, and a dozen of these were scheduled to expire on December 31st of last year. And the original budget proposed extending these for 3 years. The new budget does not extend them for 3 years. It extends the sunset dates for 6 months. And this is a good thing because it's really up to the members of the assembly to decide if these programs are achieving their goals of investing tax money, providing tax breaks to encourage economic activity. And we don't necessarily have the evidence that all of these programs work. And this will give the members of the assembly another few months now to evaluate these programs, look at reports out of the Department of Revenue to decide which programs should be extended and which perhaps not. So in fiscal 20, the General Assembly used $120 million from the rainy day fund to help close the budget gap. And one way we protected revenue is that the current budget doesn't pay the entire $120 million this year, pays $90 million back, which doesn't actually go to the rainy day fund. It goes to the capital plan fund, but that's a longer explanation, but saved $30 million in revenue this year by postponing that repayment till next year. On the other hand, there were opportunities to protect revenue that were not taken. So we'll talk in a few minutes about the phasing out of the car tax. This year, that reimbursement was above $100 million, though federal funds were used for some of that. And the state also has not decoupled from some harmful federal tax changes in the CARES Act that also have the potential to protect millions of dollars of state revenue. In terms of new revenues in the current budget, so last year the federal government increased the FMAP rate, the federal medical assistant percentages. So for each dollar of Medicaid, for each Medicaid dollar that's spent, the state pays a portion and the federal government pays a portion. Rhode Island's FMAP rate before was 53%, meaning of every dollar, the feds paid about 53 cents, and Rhode Island had to come up with 47 cents. So across the country, that was raised for the emergency by 6.2 percentage points. So now our rate is a little above 59%. So almost 6 out of 10 cents paid by the federal government. That has been extended by quarter. It recently was extended for the rest of fiscal 21. And so that brings close to 40 million additional federal funds per quarter. There were also additional monies provided for SNAP funds so we can provide maximum benefits, including replacing the value of school meals since many schools were closed have been closed for a time. In terms of new revenue, there were many proposals in the budget a year ago to raise new revenue. None of those were enacted. So we'll talk about marijuana legalization for adult recreational use in a few slides, but that had been expected to bring in more than 20 million. That was not included in the new budget, in the past budget in December. Proposal to increase the hotel tax was not included. Proposals to expand the sales tax to more services, such as lobbying services, hunting services, practices, and a few other items were not included. There were no increases in license fees for DMV and a few other departments. So none of those proposals, in keeping again with that skinny budget of not making changes, none of those were included to raise new revenue for fiscal 21. In addition, there was no, we'll talk about a proposal in a few minutes about increasing the personal income tax on the top 1% of filers. That was in the assembly last year, and that was not enacted or made part of the budget either. So the state has revenue sharing with cities and towns. It does that through 4 programs: the pilot program, payment in lieu of taxes, through the car tax reimbursement for the phase out, for library aid, and for distressed communities relief. So a year ago, the Department of Revenue estimated that that would amount to about 165 million in general revenue. That was raised a little bit later in the year. And in the end, the fiscal 21 budget provides 196 million in aid. So even 25 million more than the revised expectation. However, only 59.5 million come from general funds. So on the one hand, the local government's receiving more aid through these 4 programs than they would have received from the budget a year ago. On the other hand, the state is contributing much less, about $100 million less in state revenues to fund this increased aid. And then last, I won't go through these all now, but there had been about $268 million in 3 bond measures proposed a year ago in the budget. That was with the coronavirus pandemic and the need for the response, that was increased to about 500 million. and then eventually, in the end, not included on the ballot for November, but slightly reduced to 400 million, split out into 7 measures, and these will be on the ballot in March, dealing with things like transportation, higher education, and other matters. So take a pause here. That's our review looking back at last year and the current budget year.
Yes, and I don't see any questions in the chat, but I'll give folks a minute to raise their hand if they have a clarifying question before we go on to 2021 session. Anybody want to clarify anything? For those who joined after the intro, we will be recording this session, and then at the end of the presentation, we'll stop recording and open it up for more general conversation. All right, so I don't see any burning questions. So Alan, go ahead and continue.
Okay, great. So in terms of expectations for the new legislative session, the fiscal 22 budget, we're certainly not going to cover everything now. I'm going to focus on 2 issues. One is the, of great concern, the budget gap, and the second item, revenue options, in part as a response to the budget gap. So we're not going to be talking about all the legislation that's been filed and that's going to be filed in weeks and months. So first, the budget gap. There's a
Okay, Alan, go ahead and unmute yourself again.
Okay, so it's a real challenge in calculating what a budget gap is, because you have to make accurate estimates, and we don't necessarily have complete information. Things remain unknown. So basically, we determine a budget gap by estimating how much we plan to spend, then how much revenue we have to spend, and then calculate the difference. So we take the estimated spending, subtract the estimated revenue, and that provides us with the gap. So I would expect sometime in the coming weeks for the House and Senate fiscal offices, sometimes they do that after a budget is submitted, which this year will be in March, to come out with their estimates. So the only estimate we really have right now is one that was put out a week or 2 ago by the Rhode Island Public Expenditure Council, RIPEC. And their estimate in their document that's on their website is a little over $500 million. And so our question is, how does RIPEC arrive at this amount? Sean help show you that. And then what additional information might cause us to modify what they've said. So twice a year, there's what we call caseload and revenue estimating conferences. They happen in April, May, and then October, November, where the representatives from the House and Senate fiscal offices and the administration from the Office of Management and Budget get together, and they take testimony from different experts, sometimes outside experts, information from agencies, and they, after that, come to some agreement on, for example, how many people are likely to require cash assistance or Medicaid, and they also, in the revenue part, try to estimate what revenues to expect in the year. And so this year in November, the 3 conferees agreed that we were expecting about $4.045 billion in general revenue. So they're estimating just the state part of those revenues, not the federal part. And that establishes what the governor has to work with in designing a budget, the one that's usually proposed in January. That's the sort of the starting working point, what there is to spend. And so now we'll have the math portion of our presentation. So how does RIPEC get their numbers? So to get the revenue number, they start out with that number from November. They add back in the hospital license fee, which as a matter, I guess, of state law is not included for 22, but they expect it to be renewed or included. And then by statute, 3% of whatever revenue are available is set aside each year for the rainy day fund. And so the General Assembly and the governor have then 97% of revenues to work with. So when you add in the hospital license fee, subtract the set aside money, we have 4.08 billion in estimated revenue. RIPAC then takes not the actual amount of state expenditures in the fiscal 21 budget, which we saw above was about 4.15 billion, but they estimated at 4.57 billion. So why so much more? So what they did for their estimate is they said, well, what are the things in the budget not only that we use general revenue for, but we ordinarily would use? So all those kinds of things like that we're using federal funds for, say to pay salaries of people in the health department. Let's suppose that we needed to use general revenue for those expenses and not rely on the federal revenue. Let's put those back in and see what state, in principle, what state expenditures would have been. And that's why they get this much higher number. They then look at expenditures over a period of years, and that state expenditures tend to grow 3 to 3.5% per year. So they add that in. And then they add in the repayment, or I can take away the repayment, that extra 30 million we mentioned for the rainy day fund, and they get to their then total amount of expenditures. And when you do the math there, how much they estimate the expenditures are versus the revenue, the gap is $659.8 million, which is not the 513.7 we noted before. So they get there by then saying there's $110 million of what last calendar year were eligible expenses to be substituted. And originally that deadline to make those sort of swaps was December 30th. That's been extended. So they figure that we can now substitute more federal money in. And their original numbers did not take into account the increase in that federal matching on the Medicaid spending for the fourth quarter. So we take those away, and that's how RIPAC gets their number for the budget gap. Okay, so then the question is, what else might we think about that might affect that gap? So the first thing is that President Biden has already sent a letter to governors saying that the governor expects that this FMAP increase will be extended through the end of the calendar year, right? So which is the first half of the fiscal 22 fiscal year. So assuming that that's the case, that brings the gap below, brings it to about $440 million. And I should add one caveat here. It's another discussion, but there are some tax issues with the PPP, those payment protection loans that were part of the CARES Act. And there are some issues you might be hearing in the coming weeks or months, the notion of decoupling. There may be implications for the budget in $100 million, give or take a few tens of million, related to our relationship to the federal tax code for rules around those loans. That could affect the size of the gap here. Okay, so what other modifications besides the FMAP increase? So recently, Department of Revenue put out its monthly report about revenue collections and assessment, and the December report showed the state $58 million ahead of expectations compared with those November revenue conference estimates. In yesterday's presentation to the Senate Finance Committee, Paul Dion, the head of the chief of the Revenue Analysis Division, called that a soft surplus. He was not sure those numbers might, as the months continue, they might not stay as high as it looks. If they do continue to grow, that could be a good news. But we didn't quite want to put that up in the top row. The biggest unknown is the new, not the December relief bill, but the new, whatever the new relief bill will be. As you probably know, President Biden's proposed a $1.9 trillion proposal. Don't know if that's going to pass as is, but likely something will pass in the coming weeks or months. And we know that last year in the CARES Act, there was $150 billion in aid to states. Out of that amount, Rhode Island got the state minimum allowance of $1.25 billion. In this new version, the ask is for $350 billion for state and local aid. So if Rhode Island got $1.25 billion from $150 billion, we stand to gain even more, even if not that whole amount is approved. And the good news is that that is likely to have more flexible rules than the $1.25 billion from last year. So maybe easier to apply to things like making up for budget deficits. So, but that's a big unknown, but that certainly could cover most or maybe all of this budget gap. What we do know is that even without that flexible aid, there will be money, federal money, including from the December bill that was passed, to provide similar relief as we had in fiscal 21 for eligible kinds of services. And so I've put in here for personnel expenses for municipal aid, sort of half of what was budgeted in 21, since right now we're talking about the first half of fiscal 22. But that'll go some ways towards decreasing the gap. We'll talk shortly about the car tax phase out, but if we were to freeze that at fiscal 21 levels, that would save another $27 million in revenue. And finally, there's the rainy day fund. That fund will be full again at the end of this year, in part because of that 3% withhold that happens. And so there's more than $200 million there. Before we cut any programs or services, there's no reason not to withdraw monies from the rainy day fund. It's been a rainy day for a while. It's going to continue to be a rainy day. If we don't use such monies for emergencies like this, it's not entirely clear why we've set them aside to begin with. So that certainly is there and is, almost half of the budget gap itself. So a few conclusions. Nothing is certain here. And we're likely to know much more by June when we expect the General Assembly to pass a budget bill. But I think there's a lot of reason for optimism in terms of closing this kind of a gap. Not included here are other measures to raise revenue that would also be part of closing the gap. Things like marijuana legalization, we'll discuss shortly, could bring in tens of millions of dollars. And I think more important to note is that we can overcome a budget gap like this without cutting jobs and services. And also, we shouldn't think only about this year and this budget gap, but really think about investing in Rhode Islanders and Rhode Island communities beyond this year and making those investments now and putting in place the kinds of revenue options that would help us do those investments for the recovery. That's going to take more than 1 year and one budget. Okay, so what are some of these revenue options? Turning back again to the car tax phase out. So we're in year 4 of 6 of a phase out of the car tax. The car tax is a local tax. People pay to their local municipal governments the money for that tax. So they collect those monies, and then if we're phasing out the tax, the question is, how are the local governments managing without the revenue they were collecting from the tax? And the answer is that as part of the phase out, the state had to guarantee to make the local governments whole by reimbursing them for the lost revenue. Okay, just to review on the car tax, there are 3 parts to the car tax: the valuation. There's a state vehicle value commission, and it uses an auto dealer's official guide to estimate how much cars are worth, different makes and models. So that's one part. How much is a car worth? Second, the exemption level. How much of the value of the car is exempt from the tax? And then there's the tax rate. Per $1,000 of taxable value, how much is paid? And the one of the difficulties is that this varies by municipality in Rhode Island. So some places will exempt $1,000, some will exempt $6,000. Taxable rate in Providence before the phase out, people paid $60 per thousand of taxable value. It goes all the way down to a little bit below $10 in New Shoreham. So there's a varying combination of these three things that make it so that people in different places are paying different amounts for the same kind of car. Over the 6 years, what the phase out does is it adjusts these three levers or these three parameters. And right now we're in year 4, where the max valuation is 80%. It means figure what is the value? You can only tax 80% of that. You then have to exempt the first 4,000, and the max rate is 35 per thousand. So the localities can collect based on those parameters, and the state then has to reimburse what they would have collected under the fiscal, under what they would have collected in fiscal year 2018. And so you can see here, in the second column to the right is the total state aid each year. And you can see it's ongoing after the phase out. It's almost $250 million each year, year after year after the phase out. And on the right side is each year, the step, the increase per year. That's why I said before, if we freeze at 21 levels, we won't have that increase of 27 million next year, or the increases in the following years, for example. And this shows those numbers in a different kind of chart. On the left side are the collections from the local governments decreasing over time, and then the state portion increasing over time. And you could note that it doesn't stay at that 224.6 million. It goes up a little each year, and that has to do with an inflation bump that's in the law for the phase out. There's also this $10 million on the bottom that's a payment that's been going every year, even before the phase out, split to local governments from the reversal of the attempted car tax phase out about 15, 20 years ago. Okay, and so this table is to show you what the difference is between, for example, continuing on the left side, continuing with current law, well, you've seen in those charts how much that will be each year. And on the right side, if we were to freeze at 21 levels, still paying that 102.6 million each year, but on the right side showing how much revenue would be saved or preserved in terms of what the states had to reimburse the local governments. And over about 8 years, that amounts to almost $1 billion. So this sort of shows how we might be able to shore up state revenue for the long term, not just thinking about the current fiscal year. Now, this is sort of very recent news, but in the law, there had been this required reporting on the phase out. And those reports just came out a few weeks ago. And those reports require, the law require the Department of Revenue to basically answer 2 questions, which they answered, was supposed to be separate, they answered together in this recent report. And one question is a statewide car tax feasible? And the other question is, can we afford to continue with the current phase out without making changes? And so these are the 2 different requirements. And the report came out, and the Department of Revenue concluded that it is feasible, looking at some other models, including from neighboring states, to have a standardized statewide car tax. And I should say, before I was presenting staying the course versus a complete freeze, there are other options in how one might address this, including trying to come up with a standardized statewide car tax. It's not an easy thing to do, in part because any change from whatever the status quo is any time is going to involve winners and losers. And there are a lot of interests here: car payers, people who own cars, local governments, the state government. It's not easy, but the report does point out that horizontal equity is good tax policy. It's not great tax policy to have different people paying the same, different amounts for the same thing, the same item or service. So a statewide version that was standardized would make better tax policy than what we've had. On the second question, can we afford to continue with this? Department of Revenue says yes, in the sense that revenues increase each year, and the revenues are increasing at a higher rate than the addition each year of that the state government has to reimburse localities. They do acknowledge, however, that there may be other priorities. It's not that any addition in state revenue necessarily has to go to this, but they say technically they think it is possible in their conclusion. Getting back to RIPEC, we talked about before for the budget gap analysis. So EPI and RIPEC don't agree on everything. We have some differences on budget matters, but in this case, in their recent report, which is available on their website, they say that given the projected deficit, the continued phase out of the car tax does not appear to be affordable. And it may be worth considering whether the state can afford to maintain the car tax cut in its present form. So, you know, I think there we are in agreement in saying we need to really look at this and for the fiscal 22 budget and figure out what makes sense going forward. Okay, turning to the legalization of recreational marijuana. It's happening in our, Massachusetts already has, you know, for the last 2 years. Connecticut, as we'll see in a moment, also looks likely to legalize marijuana. And so it's hard to think with this cross-border activity with Rhode Island going across the state that, you know, what the situation here will be. It seems like resistance legalization is starting to decline in Rhode Island, and we expect this to be taken up in the General Assembly this year. And so just to look quickly at Massachusetts and Connecticut, so Mass did start sales about a little over 2 years ago, and by the end of last summer, they had more than 60 stores, more than $785 million in revenue, sales, I should say, and an estimated $150 million in tax revenue since they started the program there. Actually, this information here on the next slide comes from the Marijuana Policy Project. It is an advocacy organization. They support legalization, but I think they have good data that I'm using. They have state level information from all over. In Connecticut, they had a bill that had the support last year of the governor and House Speaker and Senate President, but there, like here, there was limited legislative activity in the wake of the pandemic. And so they did not pass the bill then, but expected to be taken up again this year. Their estimates had first year revenue between 35 and 53 million, over 5 years, between 223 and 287 million in state revenue. And they also had something that would allow municipalities to add onto that and to gain revenue from legalization. So for Rhode Island, the proposal last year from the governor was to have something modeled on the New Hampshire state liquor store model. I was unable to find examples in other states to see how feasible or the value of that kind of approach. Lieutenant Governor McKee, who we expect to be governor shortly, had an interview in Providence Business News this week where he acknowledged he's been on record saying the time has come to legalize marijuana, though he disagrees with that New Hampshire state model and thinks it should be more of a private model with regulation from the state. In terms of revenue, this chart here was taken from a few years ago, so it's not accurate for now, but this was, I think, more from about 4 or 5 years ago, predicting revenues if it were legalized in Rhode Island. And based on, actually those are sales, and revenues from the sales were estimated to be about $48 million a year annually after I think about 3 years. So we're talking here about a possibility not sure in the first year, but tax revenue from legalization in the tens of millions of dollars. So substantial in one sense. It's small compared to something like lottery revenue. And it's small compared to some other efforts, such as increasing the personal income tax, which is our last topic to discuss. So now we know that most people have been suffered from the coronavirus pandemic, certainly loss of life, in health and financially, but it hasn't been even. You may have seen reports in recent weeks or months that billionaires have increased their wealth by more than $1 trillion over the last year. So it certainly, the suffering hasn't been spread equally. Not that we have a lot of billionaires in Rhode Island. I think the current count is one, perhaps. But we still have millionaires, and millionaires have benefited from various tax cuts, including in the CARES Act, from the more recent relief bill, from the 2017 tax cut bill. And so any changes that we make to Rhode Island taxes on, say, the top 1%, first will have no effect on any of the federal tax benefits. Those will be retained. But so the question is it feasible to tax wealth? And until pretty recently, I think our national partners thought that that was not realistic. I think people are beginning to think that kind of thing is possible, though it'll certainly be easier if it's done on a federal level first. So what are the options for taxing wealth? And some of these are sort of taxing income, but there is a high correlation between high income and accumulated wealth. So one option would be to change how we tax capital gains, sometimes called unearned income, kind of investment income. In Rhode Island, we now tax it at the same rate as wage income, though federally it's taxed at a lower rate. So people who have lots of capital gains pay less money federally. So even if we were to do something on the state level, those generous federal benefits would continue. And options here would include doing some kind of a surtax, say a 1%, 2%, or 3% surtax on capital gains income. Could be a one-time pandemic surtax. It could be just a separate ongoing tax. That's one kind of a possibility, to recognize that this kind of income is different from regular wage income. In terms of inherited wealth, the Rhode Island, it's only a few hundred estates per year are affected by the estate tax, and the federal exemptions are much higher even than Rhode Island. Actually, was a bill introduced this week to up the exemption in Rhode Island from about 1.6 to 2.5 and then to $5 million. The estate tax brings in tens of millions of dollars, sort of $30 to $60 million a year. To further weaken this, I think would be a mistake. And although it might have a hard time gaining passage, one option would be to roll back the high exemption level, go back maybe to before it was raised in 2015, 2016. And again, none of this would affect how the states benefit from the federal taxes. And last, there's the option of real estate taxes, taxing second homes or high value homes. Some kind of variant of a mansion tax is certainly a possibility. And so, some people have done really well despite the economic crisis in these difficult times. And even people, I should say, people who start out well, and any kind of tax in this regard that's put in will affect people who are continuing to do well. So it won't be a great harm. So one option, getting back more directly to income, is a proposal that's being proposed again this year. We're part of a coalition, EPA part of a Revenue for Rhode Island coalition, is to create a new tax bracket for the top 1%, affects about 5,000 taxpayers in Rhode Island. it would make that bracket at 8.99% instead of 5.99%. The current highest rate. And we should note that right now at 5.99%, I mean, someone who say has taxable income of $160,000 pays the same 5.99% on that $10,000 to someone who makes, $1,010,000 pays on that last $10,000. So this would increase the rate only on income above about $475,000. And this will help. We already know that people in the lowest 20% of income pay more as a percentage of total taxes, income, property, sales taxes, than the top 1%. This proposal would bring that top 1% more in line with the next 79% at least, as shown in the chart here, and would generate an estimated $128 million in revenues that could be used for the kinds of investments that we ought to be making in Rhode Islanders and Rhode Island communities. Here are some resources for looking at more budget information and ways to stay in touch with the Economic Progress Institute.